Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 20th of May. So we've seen another good week of movement on a lot of the key indices, and obviously the currencies have been really playing the game as well, especially some of the majors. So we'll jump straight into the charts and see if we can identify any trades for today and early into next week. All right, we'll start out here with the Aussie USD, and you can see it's behaving itself very well in the ranges that we set for it last week, and even the week before that. Actually, it's been pretty good. You can see that it's come up and touched the 20 moving average. It just tagged there. I'll blow that up a little bit so it gives you a little bit more of an idea. You can see that it came up, just touched the 20 moving average at around the 70 area on the daily, and yeah, it's a pretty important zone because, as you know, it did sell off the minute it's touched it there on basically at the start of May, and you can see it did it again there. So we know that it's actually in a bit of a downward spiral, but realistically, this is the level. If it's going to turn around, what it has got now is a role reversal zone to help it turn around as well. So it's got these points here that may keep it down. It's one of those things where, look, it's been pretty volatile. The last 2 days, you can see that we've been as low as 69.50 and as high as, and that's a reasonable range for the Aussie. Like, right now, I know we're getting pretty good ranges in it, but we're not often getting the reversal. Like, this is 3 days of reversal now and switching basically 100 and 120 pips. So that is starting to get a little bit exciting for this particular pair. But now it is at a level where it needs to do something. It's either going to sell off from here and actually push back down to these lower boundaries, or it's going to close above the 20 moving average. And we're going to let it decide. There's no point trying to actually preempt what it's going to do, because realistically we want to listen to price. So, when we go to the smaller time frames, you can go to the 4 hour and you can see that we're basically in a sequence of higher highs and higher lows now. So it leads me to believe that maybe the sell-off is a little bit over on this one, and we might start to see a little bit more strength. If you're going to use this one as your guide, we know we've got a lightning bolt, but in my mind though, it still has to get above that 20 moving average. So as much as it has done this, it has got a roadblock right in front of it, which is a 20, okay? And that 20 is not just a roadblock from a moving average standpoint, it's also a roll reversal zone. You can see right through there that we've got some roll reversal touches, and it's going to be an important zone no matter what. So in my mind, if we get over we really need to clear the 70.80. If we get a close above the 70.80 before next week, or even at the start of next week, then we start to look at pushing up again around that sort of 71.50 to 7200 targets, all of these areas that were previous support and resistance. But it does need to do that. If it doesn't get close above the 20 moving average, needless to say, that's simply not going to happen, and it's certainly not going to interest me in taking any longs. So until it does that, I'm not interested in any longs. However, on the short, I would be looking for potential opportunities to take it below these levels here and push it back down to the 69.50 area. So around this area here, I've got no problems with that. And realistically, again, it's one of those things where price needs to actually determine where it's going to go. If it does get a low below the 70.35 area here, so if we get a 1 hour, even a 1 hour close for me below this level here, would be good. I'd wanted to see it break the 20 moving average. If we get that and we get a series of lower highs and lower lows, even on a 15-minute chart at that point, I would be starting to target these levels here around the 69.50. So it's only scalping. We're only talking about a handful of pips. We're only talking about 40 to 50 pips really at a time on this one, even on the way up. But it's still a reasonable scalping environment for it. Like you can see, although we've got big ranges of movement, the smaller time frames have been playing in the game. So you can really get these lightning bolts in and aim for the key zones. But until these key zones get broken, we definitely trade inside them. So pretty easy on the Aussie USD. All right, move over to the US dollar CAD. This one's a similar story in that it has been whipsawing the last 2 or 3 days, but it still does find itself at a very strong support level. You can see here, this is a daily chart, of course. You can see this level that we drew the other day at 128.17 to 128.20 really. It's proving to be a bit of a mainstay for it. It's had a day or two of trading here now, and you can see it is starting to hold up. But realistically, it's looking like it wants to push down, and this is the danger here. Like you can see it, the moving average is starting to compress on the smaller time frames, and it is hovering underneath that line. So realistically, if it gets above here again and makes a series of higher highs and higher lows on the 1 hour, then we start to push up to the 129.50 and 130 area again. But if it fails at this level here underneath the moving averages and starts to trend lower and starts to push down, then we've got a pretty easy target as well, which is around that 127.20. So again, it's only scalping. We're only talking about 100 pips, and you might only get 50 or 60 of those by the time it makes a lightning bolt. But at least you've got momentum on your side, and that's the most important thing, right? So realistically, it's finding itself at pretty much a very similar level to where it was last week, but it's had plenty in between. So, okay, we get a lightning bolt above this level here, above the 128.20, and we start targeting the 129.50, okay? And failing that, if it makes a lightning bolt to the downside and sells off from this 128.20 area, the pretty logical level, I'll put a horizontal line there for next week, pretty easy level to go for is the 127.20, because that's the most likely target, and it can get there fairly quickly. Okay, so pretty range bound really when you look at it. Like, it's pretty squared. This is the area that I'm talking about. It's a little bit lower than 129.50, actually. It's 129.20. You can see the touches through there. That's the area that we're aiming for. Okay, so they're the two zones. It's right in the middle of it at the moment. Whichever the lightning bolt goes, that's the one we'd be comfortable trading. All right, US dollar yen. This one is, look, it's starting to show the weaknesses. I know we've been talking about this for a little while now, but now it is actually starting to show a little bit of weakness. And by that I mean, yeah, it made a high, made a very recent high here. Like, you can see that it went up to the highest point it reached, which is 131.08 on that particular candle, and failed at that level, and then it's come back down all the way to the bottom here, tried to rally again, but failed a hell of a lot lower this time, right? It failed here. So now what we've got is a sequence of basically lower tops, and now we're putting pressure on that mini support zone. So although it has rebounded off here now, it is trying to trade underneath the 20 moving average, and I think while it's doing that, that's going to be, it's going to spell a pullback probably, pretty soon, really. Like, you can see that's a fair bit of weakness. If we get a close below the 127.80 on a daily chart, especially if it's at the end of the week or early next week, you could see the weakness start to kick in, and we'll be starting to target these levels here again, probably the 50 in the first instance on the daily, which is around that 125.70 area, probably 125. It'll be 125.80-ish by the time it actually closes for the week, but that's the area that I'd be targeting. I wouldn't be going crazy. I don't think it's going to be selling off in a massive hurry. I think there's no reason for that. But we're probably going to see that weakness. I think the weakness is starting to tell here. You can see that now. And with the lower high, it's the telltale sign that it is starting to run out of momentum. And of course, it is trading underneath the 20 moving average now. So very interesting one to watch. The only way I would be interested in actually taking this long again now is if we actually get a daily close above the level that pulled it up, which is the 129.60 area. If we get a daily close above there, then we can start targeting the 131 again, which is still a good, decent amount of pips away. But that means that momentum is held up at this support level here and pushed up, so price is able to get up and get going again and push up. But I wouldn't be taking it until it reaches that level, because then again, you got momentum on your side, and it makes it quite an easy trade from that standpoint. So it's pretty good, really. I mean, I think it's doing what it needs to do, because when it was pushing up higher and higher and higher, I think it was difficult to trade because it was reaching levels that we probably weren't really expecting. So now it's come back and doing all of the right things from a technical standpoint, whether it's a pullback or whether it's a push forward. At least now we've got a range, and we can work within that range to actually get a reasonable amount of pips out of it. So anywhere between 100 to 150 is possible on the downside, and we've got a good 100 on the way up, even if it gets actually past this 129.60 area, because then we're targeting the 131. So certainly not bad trading on that one. All right, we'll move on over to the dollar index now. Now, look, this is pushed past the 20 moving average for the first time in a very long time, and it's going to be an interesting close this week. There's no doubt about that. I'm going to be probably watching the daily close on the Saturday morning more than anything else. You can see that we've pushed obviously to a new high on the weekly, and it's very, very far removed from all of the moving averages. So realistically, from a technical standpoint, it is certainly due for a pullback. And even from a daily, look, if we can get, this daily is probably all but sure to close below the 20 moving average. If we get another daily close below the moving average, that's going to spell a fair bit of strength for the euro, actually. That's the one that's going to really be the beneficiary. Dollar strength is probably weakening here. You can see that, again, we're going to close below the 20 moving average short of a miracle. And the next day's trading is going to be an interesting one. If we get a daily close below here on Saturday morning, the late New York is when we see this, and we're trading down here, then we're looking at probably a bit of weakness next week, and we'll start to trade long on the euro. So let's go to the euro itself and have a look at this. you can see that it's still technically in a downtrend. There's no question about that. Obviously, we're getting lower highs and lower lows still, but it is starting to show the signs that it is pulling up a little bit stronger than we probably would like. In fact, it certainly tricked me. It got me here because I thought it was looking like it was going to go short at this point here when it did break through, but it did resurge when the dollar index started to get hit, and you can see that it pulled up pretty quickly, and now it's found itself at a place of roll reversal, very mini roll reversal, but it's there. There's no question about that. You can see all these tops here. It's a very interesting point for it, actually, the 105.80 area. You can see here, look at all those touches on the 1 hour. Okay, so that channel there has been broken. Okay, now what it does from here, more than likely, I probably almost expect it to actually probably reverse from this level and start pushing up to around that 106.50. Actually, that's probably the target for this one now, because it's certainly switched around. There's no question about that. Here it was looking very, very short. All of a sudden, we're looking actually long. Not for a big long period of time, but yeah, it's definitely looking stronger. And yeah, this roll reversal here, yeah, that's resistance right through there. Obviously, it's broken through. Now it's testing that from above. If you want to trade this, what you need to be waiting for now is a close above this level. If the 1 hour closes above the 106, say 10 area, then yeah, we can start targeting basically the 106.50 is the first target you're going to go for. But it needs to do it. I wouldn't trade this until it broke the 109.60. If you want to absolutely scalp it, and scalping is what you're really going for, you can go to a 15-minute chart, and if you get a series of higher highs and higher lows on a 15-minute, and it actually gets below it breaks higher on a little lightning bolt before that level, maybe you can enter in for a scalp. And if you really want to scalp it, you could probably look for a very small bottom here and aim for that 106.010 even in the first instance if you like. It wouldn't be a bad scalp. That's the place it's going to find resistance if it's going to. And if it breaks through there, obviously the 106.50 is the target. Now, failing that, of course, if it gets back down below this level and starts to trend down and makes a series of lower highs and lower lows, like let's just say it breaks down here, comes up and tests it from below, then that's looking like short again. And bottom of the channel is the first target, which is around that 104.80 area. So another 100 pips. They're all trading and behaving very, very well. A lot of these currency pairs, they're staying within their ranges and they're proving to be very technical. So yeah, they're not bad trading at all. All right, finally, we'll have a look at the US 500, the one that everyone wants to know about. Again, we're still in a technical downtrend. It really, really pushed the boundary last night. You can see here, the 38.99 level was pretty much right on that level. It was trying very, very hard to get below the 3,900. Okay, that's exactly where it failed last time. What it does now is going to be extraordinarily important for what happens next week. If we get a trading session tonight in the US and we get a close below this level here, it's starting to look very, very bearish to around that 3,600, 3,550 area. Now, I know that's a big fall from here, but there's not a lot catching it in between. And that's the important part. And it has failed again to actually move up. So that's why it's a significant area, because if it holds up from here and starts to trend up, and let's just say this candle or the next candle ends up green and we're sort of hovering in this area again, then it's starting to look like a little bit double bottomy, and it's tested that level twice and failed to break through twice. So that gives us a little bit more inclination that it's got a bit more strength left in it. So that's why this close is so important, because if we do get a close below this level, that's telling us the signs that the weakness is still there. The bulls have not been able to actually take it as high as they needed to take it. They haven't been able to win the war, more importantly. And then it bodes well for a pretty big sell-off down, and then the next leg of the sell-off. So, and that gets it down to around that 3,600. So wouldn't be surprised at all if it did that. In fact, it's almost likely. But again, I would be letting price action dictate there. We can't predict this because this is one of those ones that's at an extraordinarily key level. If we get the close below there, we're going to be looking at bearish next week and looking for selling opportunities on all of the smaller time frames. And if it's a green candle, and depending on how high it goes, of course, even if it hovers around this level here, we'll be looking for the signs in the very first 1 hour or 4 hour change of trend early next week is the one we'll take, and we'll either trade it into the 20 moving average or back up to the 41.50, or indeed if it's on the lower side, we'll start trading it down and follow the signs down there. I'm happy with it at this level because it's giving us good opportunities to trade either side, whether it's long or whether it's short. Haven't really got a bias here. They're both going to be quality trades. All we've got to do is wait for the lightning bolt, and whichever way price swings is the way we'll trade. So I hope you've been able to capture some good opportunities this week. I think we've had some really good trading again. A lot of the setups that we talked about did work out and the levels held up. So hopefully you're able to take advantage of that. Have a great weekend, and I look forward to seeing you all next week.